So this plan is a unit-linked plan. It offers both the insurance and investment component, but very frankly, this is more an investment plan rather than an insurance plan. Uh, you should look for a cover of 10 times your annual premium for all the tax benefits to actually be effective. So just keep a note on that, the premiums which you pay in a year should at least be 10% of the sum assured, or should be less than some 10% of the sum assured for the tax benefits to be applicable. So with the tax benefits, this can actually be quite an interesting plan in case you're trying to get maximum returns from such investments. Both the premiums which you pay, the partial withdrawals in case you do it, and the maturity amount, all of them will be tax-free in this plan. Please keep in mind that this plan, as in all ULIPs, have a 5-year lock-in period. That means you cannot touch your money no matter what before 5 years. This plan can be bought completely online, and you can actually service your plan also online. ICICI Prudential has made most of the servicing element into the digital format. So, most of the service requests can be done by you yourself. So that's quite a development which is happening in the industry anyway. Please keep in mind that a plan with the same name existed even before, which was discontinued in July of 2018. So you will have to actually identify this with the UIN which will be given. So in this plan, the UIN and the policy details when it was launched are as shown to you now. Now let's understand how this plan works. You decide how much money you want to pay on a regular basis. You could pay it monthly, quarterly, half-yearly, or annually. I would recommend that you choose small amounts and pay monthly. It works like an SIP and actually considerably reduces your risk. So take the monthly mode is what I would recommend. Of course, you can choose the annual mode or the half-yearly, quarterly, as I said. And there are different options when it comes to the premium payment term. You can choose to do a single premium. That means you're a businessman, your income is not very regular, so you have some money right now, so you can invest it all at one go. Or you can do a limited pay, in which the policy term is 15 years, but you choose to pay only for, let's say, 7 years. So you have that option. Or third option is to do a regular pay, in which you actually agree to pay every year throughout the policy term. So that's a call which you will have to take. So once you decide how much of premium you want to pay regularly, then based on your age, the amount of cover gets decided. Of course, you can choose to increase or decrease the amount of cover which you have, but keep in mind that the premiums which you pay in a year should be less than 10% of the sum assured, else it has tax implications. The premiums paid by you are now invested, and you have a total of 9 funds to choose from. So, right from aggressive funds to actually quite conservative funds which are low risk. So the aggressive ones typically are chances of returns will be higher, but there is an element of risk. The lower risk ones will actually be quite moderate, and they would be, bordering around the 6% range. So if you are more comfortable with the lower returns, you can choose, or you can do a mix of any one of these. So that's something which you can decide. Or there are some fund strategies which this plan option provides. You can choose them also. Now the funds which you buy have a certain NAV, or the net asset value. So the number of units of funds which you have multiplied by the NAV of that fund on a daily basis gives you the fund value which you will have. So at any point, your fund value will keep varying on a daily basis. And you can check that online at the ICICI Prudential website itself. Now let's quickly look at the eligibility criteria in this plan. Who can buy it and how they can buy it and what are the different criteria. Most of this will be explained with the help of a table. So here it is. The premium payment term, also called as a PPT. There are 3 variants of it. A single pay where you just pay a single premium. A limited pay where you just pay for 5 to 10 years, but the policy term could be higher. Or a regular pay where the premium payment term is equal to the policy term. Also, what kind of policy terms can be taken will be very clear to you in this table. The minimum premium for a single pay is 50,000, and regular and limited pay is 30,000. The maximum premium, there's no limit. That pretty much, is the crux of the eligibility criteria of this plan. So what are the fund options which are available in this plan? As I said, there are 9 funds for you to choose from, and we will again list them on a table ranked by the more high risk, high return to low risk, low return. So here they are. So we have the blue chip fund, which the potential risk reward profile is high. Maximizer 5 fund, which again the risk reward profile is high. Multi-cap growth fund, again high risk reward profile. Maximize India fund, again high risk reward profile. Multi-cap balanced fund, the risk reward profile is moderate. Active asset allocation balanced fund, here also it's a moderate risk reward profile. Income fund, it's a low risk, low reward profile. And a money market fund, which is again a low risk reward profile. So it's your call which funds you want to invest in. You can actually study how they've been performing over a period of time. You can go to the site and see over a 5-year period how they have been performing, and then invest. Maybe you put part of your money in high risk reward profile funds. In some you put it in medium or moderate, and some in low, and then you can keep seeing. Maybe if you're young, you might want to park a good chunk of it in the high risk reward funds, and that's a combination which you'll have to see. Reach out to friends, reach out to the insurance company and see if they're suggesting something. So you can manage your funds yourself, or you can actually go by some of the fund strategies which ICICI Prudential has pre-designed for you. I would say you should give this a shot, because managing it yourself might become a bit of a challenge. So there are 4 strategies which the insurance company has defined. I would say you should spend time understanding that. Go through the brochure of the plan. It's quite a detailed note on how each one of these funds work, fund strategies work. So go through that, please. So the names of them are as follows: life cycle based portfolio strategy, fixed portfolio strategy, target asset allocation strategy, and trigger portfolio strategy 2. And you can actually exit these strategies and change it as you want. So that's a flexibility which is provided in this plan. Okay, so here's another highlight of this plan. This plan offers you certain bonuses, and bonuses are for actually staying invested for a longer period of time. So if you invest for more than 5 years regularly, then the company adds certain loyalty additions and wealth boosters to your plan by way of certain units being added. Now, these additions depend on your premium payment term. So please go through this table. So if you see 5 to 6 years, there is a certain additions which are happening, including wealth boosters. 7 to 9 years, 10 years above, and for single pay. Please keep in mind, loyalty additions will be a percentage of the average daily fund value, including top-up fund, if any. The wealth boosters will be a percentage of the average fund values, including top-ups fund. So let's understand the benefits in this plan, specifically the death benefit which you get. To understand them better, let's define some of these parameters. So let's take A as the sum assured of this plan. B will be the fund value of this plan, and C will be 105% of the total premiums which you have paid. So in case of a single premium plan, the death benefit will be higher of A, B or C. So whichever is highest, you get that. In case of limited pay and regular pay, and the age at entry is less than 50 years, then you get higher of A plus B or C. And death benefit for limited pay and regular pay, in case the age of entry was greater than 50 years, then it is higher of A or B or C. So very clearly, the death benefit is maximum in case the age of entry is less than 50 and you've chosen a limited pay or a regular pay option. The maturity benefit very clearly is the fund value which you have. So, hopefully your funds would have increased substantially. So the units which you have and the fund NAV of each of these funds, multiply them to get the fund value of your plan. Now let's look at some of the other benefits or features of this plan which are quite flexible. First is a partial withdrawal. So in case there is some emergency money which you want, you can withdraw it. And this is completely tax-free. So partial withdrawals can only be done after you complete 5 policy years. And you can withdraw a maximum of 20% of your fund value. So, and it is completely tax-free. So it's a great flexible tool, and it offers you some liquidity in case you need some money urgently. So fund switches. 9 investment options, 9 funds which are there. You can actually move between them as many times as you want. But the 4 switches in a year are free of cost. So that's a facility which you can use. I wouldn't recommend that you do it too often. But 4 free fund switches are available in a policy year. You can log into the system and do it yourself. Or of course, you can do it to the fund managers to do it themselves for you. There is changing the portfolio strategy. The 4 portfolio strategies which we had actually mentioned. Again, you have 4 changes which you can do in a policy year. All of them are free of cost. Beyond them, there will be a nominal charge which will be applied to the policy. Top-up facility. So in case you have some additional amount or you're very happy with the policy, you can actually top this plan up by paying extra premiums. But please bear in mind, from the moment you pay the premiums, the money will be locked in. This additional money will be locked in for 5 years. So please keep that in mind. And also keep in mind that, last 5 policy years, you cannot do any top-ups. So that's an additional feature to invest more money in case you're happy and it is performing well and get tax benefits. Then there are some more benefits which are offered. You can increase or decrease the amount of cover, the sum assured which is there. So that's an option which has been given. I wouldn't recommend tinkering too much unless you have a specific reason for it. Similarly, you can increase or decrease the policy term and the premium payment term. Please have a very good reason for doing this and understand the consequences of doing it before actually venturing into changing the sum assured policy term or the premium payment term. And lastly, you can actually surrender this plan, but it can only be done after 5 policy years. If you surrender before 5 policy years, you will still not get the money immediately. It goes into a withdrawn fund wherein the returns are pretty much fixed. So if you're getting into this plan, please ensure that you are capable or you have enough money and liquidity to stay invested for 5 years. Now let's come to the charges which are applicable in this plan. So this plan does not give you a different breakup for fund management charge, policy administration charge or a premium allocation charge. Overall, it says that the charges would be in the range of 2.04% to 1.12%. So in case you're going in for 25 years, it is 1.12. But even if it is a short term 5-year plan, it will be in the range of 2.04. This is of course after the wealth boosters and loyalty additions are removed. So overall, it is in a low charge category, and hence I think it is quite popular. So if you have a 10-year horizon, the charge rates actually match up to what a mutual fund would be doing. And you get tax benefits, you have partial withdrawals, none of which is taxed, and hence this makes quite an attractive investment proposition. That's pretty much what I wanted to say or explain in this video. If you have any questions, please do drop a comment and we will definitely get back to you with our inputs. Thank you. If you like it, please share this video with your friends.